Hello everyone, welcome to a new video. Welcome to my YouTube channel. How are you doing? I'm doing super good. It's super warm today. It's finally summer. The winter here in Sweden just takes forever. It really sucks. Like, it's super cold and super dark. But now it's finally summer, so I'm happier. And yeah, in today's video, I'm going to be talking about support and resistance. Support and resistance is one of the most important things in trading. Let me tell you guys that almost 90% of the traders out there, they consider support and resistance areas on the chart because it's a key price level. I'm gonna make this as simple as possible because I know there are a lot of videos out there and they make it super complicated. So I'm gonna keep this simple and quick. So let's just jump right into the chart. So what is support and resistance? Support is a price level where a falling market tends to stop and bounce back up. It's like a floor that holds the price from going lower. All right? On the other hand, resistance is a price level where the market tends to stop rising and reverses to the downside. So it's like a ceiling that blocks price from moving higher. Okay, and that's all support and resistance is. Okay, like if we look at the chart, we can see, I can directly see a resistance and a support. Right here we have a resistance area. Why is this a resistance area? Because price moved all the way to here, then it reversed to the downside, it went up again, and again it reversed to the downside. So it was rejected 2 times, making it a resistance zone. Okay? Then if we look under here, we can see this support. Why is this a support? Because price went down, bounced back up, went down again, bounced back up, went down again, bounced up. You can clearly see that this is a strong support because price has failed to move lower. Why does support and resistance work? It's all about market psychology. Traders remember past price reactions and they tend to place orders at those same levels. Also, hedge funds, institutions and banks, they really look at support and resistance area, and they also tend to place huge orders around these levels. That's why it works. So if let's say a resistance comes, goes down, comes again up and goes down. If it goes up again for the third time, hitting the resistance, there is going to be a lot of sell orders and a lot of traders willing to go short. Okay, it's just market psychology. Of course, it does not always happen. Of course, we're not always going to sell at the resistance and buy in at the support. But I will explain that later in this video. Support becomes resistance and resistance becomes support. It's as simple as that, exactly how you hear it. When we break a support level and we move down, we're breaking the support, it becomes resistance. And if we break a resistance to the upside, it will become support. I'm going to show you an example of this. Let me find an example. Yeah, right. I'm gonna put it here. We can see that this here was a support, right? Price went down, bounced up, went down, bounced up, broke the support, went up. Now this is acting as a resistance, went down. Acts as resistance, goes down. Acts as resistance, goes down a little bit, breaks the resistance, and look, now it's acting as support, goes up. It's acting as support, goes up. And this is what I mean by resistance becomes support and support becomes resistance. It's really that simple, guys. It's really that simple. This cannot be difficult. So there are some rules when it comes to support and resistance. The first rule is that it must have multiple rejections, guys. It must have multiple rejections. All right. If let's say if there is a chart, I'm gonna try to draw this as best as I can. For example, okay, right here we will put the resistance here and we will put the support here, because it has, the support has 1, 2, 3 and 4 rejections, right? And the resistance has 1, 2 and 3. You don't put this as a support or this right here as a resistance, because it has only 1 rejection. And if it has only 1 rejection, it's not a support or it's not a resistance. That's the first rule. So the second rule is it must move away from a swing high or a swing low. Let me go on a lower time frame and explain this. Let's check on the 5-minute time frame what I mean. Okay. Here we can see we have this support, right? You can mark this support right here because we create a swing low and then price moves away from it. But you cannot consider everything a support or a resistance. Here there is no swing high or a swing low. This is a swing high right here and this is a swing low. This, yes, there is highs and lows, but this is not a support. That's not a resistance either. Okay, so second rule, it must move away from a swing high or a swing low. The third rule, line must be near the current price. This is not really a rule. This is something I apply for myself and I suggest you apply it for you also, because if the current price of the Euro USD is right now is 1.15429. Okay, so that's this right here, the red line. You don't want to go all the way down here and mark out a support right here. It doesn't matter. It's too far away. It's past data. It's history. You don't want to go that much back in time, right? Otherwise, you can keep going and put another support right here and another resistance right here, but it's too far away. So draw your support and resistance near the current price. Otherwise, your chart is going to be looking like this, full of lines, and you're just going to get confused. So the fourth rule, and again, this is not really a rule, this is something I just tell you because it can be a bigger area. It doesn't just have to be a line. I like to use lines because it's easier for me, it's better for my eyes, less complicated. But there's people that, for example, this support zone, instead of drawing a line, they will draw a rectangle like this, which actually works pretty well. Because like I said before, the line is never like, it's never like, the market is almost never gonna be perfect, a perfect line, you know. It can be a little bit like this, kinda, and that's still that will still be a resistance right there. For example, right here, if I will draw a line right here, it doesn't touch here and it doesn't touch here. And if I move it a little bit up, there, it wouldn't touch down. So that's why some people, they instead of using a line, they use this rectangle, and it works pretty well. For me personally, I draw lines. I don't like to do the rectangle. And the fifth rule, and don't forget about this, the more a support or a resistance level gets tested, how weaker it becomes. So if it has 2 or 3 rejections, it's still pretty strong. But after 6, 7, 8 rejections, it becomes weaker and weaker and weaker. So now you know what support and resistance is and the rules. But before finishing this video, there's one last thing. Support and resistance is not always horizontal lines, of course, because there is also support and resistance on trends. Let me move this text away. On trends, okay? For example, if you look at the daily chart and we see this, If I draw a trend line from here till here, let's say, go from here, This will be the support of a trend line. A uptrend has we draw the uptrend, we use the support, so the under part, and in a downtrend we use the upper part, so resistance. You can clearly see why this is the support of the uptrend, because every time it does a rejection, it hits this line, it's the support. Same in a downtrend. For example, if you look at the left side and we look at this downtrend right here, and like I said, it's never gonna be perfect, but this will be the resistance of this downtrend, because it goes down, rejection, retracement, I mean, boom, retracement, boom, retracement, and it keeps hitting the same resistance line. Same here, up, retracement, up, retracement. That's the support and resistance in trends. That's it, it's really simple, guys. So one last thing, this is how I suggest you draw your support and resistance line on the chart, and that is by starting with the monthly time frame. Starting with the monthly time frame. Let me take this away again. Starting with the monthly time frame, I will put one resistance here. I will put another resistance, the support right here. And since it's the monthly, you don't really need much. Then I go down to the daily time, to the weekly time frame. In the weekly time frame, I will mark this out right here. Resistance, resistance, it breaks and boom, it went down, support, you see? And what else could I mark out? Since price is right now here, you can mark out this zone because it was a strong support right now, so it could be a resistance right now. Then you go down to the daily, and if you see something in the daily that you be like, for example, right here, right? You can see that here price had a hard time to push under, and then here when it broke through the resistance, hit the support, moved back up. So I will draw that one, and then from here on the 4 hour and the 1 hour and lower, I will just be looking at important key zones. Like for example, on the 50 time frame, like I said before, you don't want it to be too far away from the current price when it's in the lower time frames. So you could use this area. As you can see, it acted as resistance, broke, then acted as support. So this I will mark out. You can also mark out right here a little bit, like around this area. And that's it. That's it, guys. This is all you need to know. All you need to know about support and resistance. It's really freaking easy, I know. So I hope you enjoyed this video. I hope you learned from this video. If you have any questions, just let me know in the comments. Yeah, no, I have a question about this. Can you explain me this? I will be answering. I will help you with whatever you need help with. You can also contact me on Instagram or on TikTok even. Just ask me anything. I'm here to help. And yeah, subscribe on my channel. Leave hit the like button. I know it's a typical thing to say for YouTube, but it would really help me. And see you guys in the next video.